Hope you guys are well. Happy CPI day. I'm traveling here on the road. We are in Florida and kind of working on a mobile station, but looks like we're doing okay here. Looks like we are live. All right, perfect. Everything seems to be working. So happy CPI day. Let's take a look at what that data is. Futures are moving here. Good move here. So. Just give me 10 more seconds. Make sure we are rolling here. We hop on Twitter. TweetDeck. And yeah, looks like we're live. Okay, perfect. Working with a new laptop. First time in, I don't know, 7-8 years not traveling with an Apple MacBook, using a PC laptop, which is much easier with all the software we use. So it looks like we're up. All right, perfect. So let's dive in here. I want to look at the headlines here. We'll go full screen here in one sec. What I do like here is that CPI year over year coming in 5%, below 5.2 expectations with a previous of 6%. So I think it's psychologically good to get a 5 handle on inflation on the year over year. And then month over month on the headline dropped, came in 1/10 less than expectations, so only a 0.1% increase month over month. And then the core, which I know the Fed is watching a little bit more closely, they're watching more closely, excluding food and energy. They're watching rent, they're watching car prices, and a few others, and everything was very much as expected. I really would have liked to have seen a push down in the core level. So let's zoom out here. Let's go full screen. And let's just look at this report quickly and see what we can surmise. So headlines at the top here, rose 0.1% in March, seasonally adjusted after increasing 0.4 in Feb. Over the last 12 months, all items increased 5%. Index for shelter is by far the largest contributor to the monthly all items increase. So that's been the consistent theme, is shelter. This more than offset a decline in the energy index, which decreased 3.5% over the month as all major energy components indexes declined. Food was unched with the food at home index. That's interesting, falling 0.3%. Let's take a look at that. The index for all items, less food and energy, rose 0.4% in March. After rising 0.5% in Feb. Let me just close my Discord here. Our Discord channel is kind of popping off here within trading analysis. Okay, so let's take a look here. So this is going to be headline including core. March food was even. That's not a bad thing. Unadjusted 12 months, 8.5%, 12 months, but from the prior was flat. Food away from home dropped, so eating out. There's energy, steady, 0.6%. Sorry, right here. No, that was food away from home. Energy dropped, 0.35%. Okay. So all items, less food and energy. I want to look at car prices. I don't want to look at shelter. So new vehicles increased. That's not great. By 0.4%. New vehicles increased month over month and 6% from the prior 12 months, not seasonally adjusted. Used cars, looks like the used car price dropped, but appears to be the lowest or smallest drop that we're seeing in the last, call it 6-ish months. Okay, but 11% drop year over year, that's not too bad. And then shelter is just continuing to remain stubbornly strong. So how's the market taking it? Let's take a look at where the Fed funds futures went as a result. And then we'll jump into market reaction and get you guys caught up as to what we're seeing and how we're positioning this. So looks like, okay, interesting. We actually tacked on about 7% of a no move here in the May meeting, which is still 3.5-ish weeks away. So there's a lot of time between now and then. But we're at a 34% chance of no move in May. and up from 27% yesterday. In terms of 25 bips, we're at 2/3 chance. Yesterday it was 73%. So we're still pretty firmly in the camp of a 25 bip increase. So, and if they don't get it, it looks like in June, if they don't get that 25 basis point increase, it looks like we have, as of now, no real change day over day here. But it looks like you would do 62 plus 6.5, so 68.5, 68.4% chance that they'll get the extra 25 in June. Okay. Now, what we can do is then go and look out. See, now that's interesting. Now the balance shifted. It used to be the last couple of days, what you're looking at is the teal here of where the majority odds lay for where Fed fund futures are at the, along the x-axis is going to be your rate, and the y-axis is going to be your meeting. So they were 67, 65% chance of going to 5, 5.25, and that was actually the same out into July, but it looks like they repriced it down to here's your rate cut. Okay, here's your rate cut. So you have a better chance going 4.75 to 5 in July, and then September and November 4.5, 4.75. So they're still pricing in cuts. All right. So that's that. Let's take a look at the market reaction. So this is a macro reaction. In white will be your S&P futures. In green is Euro USD spot rate. I find it's nice to look at this. This is obviously going to be with that green line going up, that's dollar dropping, euro moving up, which is fine. And you can throw dollar yen on there as well. This is going to be your 2-year, TU is your 2-year treasury, and then TY is your 30-year treasury. So you're getting a situation here with, you know, what new information do we have? Okay, really would have liked to see that core level drop a little bit more. Came in very much as expected. Shelter, car prices firmly, you know, stubborn, I would say. So still going to 5, 5.25, still pricing in rate cuts after 3 meetings from now. So not much changes from this, I would say. So we're seeing the dollar weaken, bonds up, which means yields down. And this is the new relationship that I think you guys are going to expect to see, which is a long-standing relationship of stocks and bonds are positively correlated. So if you look at long-term correlation of the S&P and the 30-year bond, with the exception of the 2 major significant volatility periods over the last 40 years, which is 2000 and 2008, those were the times where you only saw significant inverse correlation. So I think we're going to go back to stocks and bonds trading together, which is contrary to what I think, you know, a lot of people would think. Gold, no surprise, gold rallied, and you know, this is interesting. You know, I know some people are bullish on gold, and it's fine. It may go higher, but the conditions in which gold rises are the same conditions in which stocks rise. So what's the point? You know, what's the point? It's not an inflation hedge. It's trading like it's kind of like trading like Bitcoin. It's like a risk-on instrument now because condition of lower rates. It's simply an inverse U.S. dollar play. That's all it is. So you could be short the dollar, long foreign currency, you know. But again, those are all the conditions where stocks and specifically the growth trade rallies. So, you know, you got to consider the opportunity cost. Okay, so that's just an opening kind of macro look. And again, I'm working on only 2 screens here, so I'm a little limited in terms of questions I can see. But let me see if I can pop this out quick. And if you guys have questions, comments, certainly throw them in there. And this will take me 10 seconds to pop this up. Mute. So that's just an opening kind of... Boy, I sound nasally, don't I? Okay, so that's that. And again, just type in, let me know how this sounds, guys, if you're watching. Guys and girls, just type in, let me know it's working. Say hello to me. And throw some questions in there, comments. Anything you guys want me to take a look at, I'm happy to do so. Okay. All right. Sounds good. Let me go over here. I'm going to open this one. YouTube. And we'll jump into some indexes. I'll show you the rotation that we're following, a couple positions we're working. I do have a NASDAQ options trade working that we'll be discussing here with members. And, okay. All right, you guys are quiet. Perfect, I love it. All right, so we're going to continue on here. So that's the macro relationship. And interestingly here, look at this, guys. You're seeing as the just kind of micro, 7 minutes to go until the market's opening, but you see the S&P futures ticking lower while the other major macro markets, currencies, fixed income, and gold are all pushing up. So it could be a little pre-market Globex opening shenanigans here. I would expect to see this, you won't see this kind of relationship continue, which would stocks down and all these other guys moving up. That won't happen. All right. Okay. So let's get into some indexes here. All right, and again, I'm on a traveling screen here, so you're gonna have to kind of bear with me here. All right, so here's what we're looking at. I should say, my proposal is that continuing to be on the weekly S&P. This is our preferred wave count, and I do have an alternate. I will show you that. We are looking at quite possibly a 3-wave decline. And the 3-wave decline within ABC on the S&P weekly, as you break down into the daily, get a little bit more detail, would be an elongated diagonal in A. Okay, so we have 1, 2, 3, 4, 5. Clearly a 3-wave move up in B. This would actually, it's actually considered a zigzag, which is fine. Short A and kind of a long C. In fact, the C was 2.618 to CB, and then, yeah, 1618 of orange A and C. So that's a 1618 projection. That's fine. And then we did a smaller, more abbreviated 5-wave move down in C. So now what we're looking at here is a potential 5-wave move in the S&P off the lows. Now, the S&P is not above the February 2nd highs, which, as we flip over to the NASDAQ, is. The NASDAQ strongly suggests that it is 5 waves off the low, which NASDAQ growth is showing some pretty good rotation in lately, I would say over the last 3 to 6 months. And we can talk about this quickly, but this is a period of time right now in April, and this is something we've been focusing on a lot with our members, that seasonality actually shows that stocks do well in April. It's actually the 2nd strongest month of the year, but what's key is the value trade by far seasonally outperforms the growth trade. And you're seeing some pretty significant hints of that here. Value, of course, would be your utilities and staples, healthcare, real estate, and real estate's kind of crazy right now, obviously, with its very tight, sort of overlap with the financials, with everything going on there. So financials aren't acting like a safe haven, but we do have seasonality that suggests the value trade is where you want to be looking. Okay, so we can kind of focus on that. So here's the S&P on the daily. Let's get down on the intraday. We'll get onto a 60-minute chart. This is going to be wave 4 here. And what we're looking at here is in the midst of a, this was going to be this is a minuet wave 3. And coming from March 10th, if you're looking at 1, 2, we're looking at a potential 5-wave move up in 3. Okay. Now, we're at 100% projection of 3v1. All right, so we have 1 projected up from 2. 100% has not yet been reached to 41.45. Really would like to see that be tested and broken. And then your traditional wave 3 does get up to the 1.618. So we'll see if the S&P and that seasonality in the value trade has enough influence on the S&P to push us up there. So within blue 3, I don't mind showing you guys this. We are looking for the completion of green 4 within blue 3. And again, if we can get up to that 100% 3v1 ratio, come on. It's hiding right there. There we go. And again, if we can get up to that 100%, that certainly would be good, and it would suggest that that green 4 is over, and we can go ahead and attach that right there. All right, so with the market opening here in 3 minutes, let's just take a quick look. So the S&P coming in, futures are trading, let me pop this screen over. Futures are trading right now 41.56 in the ES front month contract. 41.56 puts you above that 100% on the open. That's going to be, that's telling, okay? Now, 5%, yeah, there's our, let me close our company Slack. We've got Discord, we've got all kinds of communication here. Let me see if I can mute notifications there. It's also fun kind of settling into a new computer when you're on the road. All right. Okay, so that's going to be that. So that's going to be interesting. 41.56 on the futures. Of course, there's going to be a difference between the cash and the futures on the open, but that is going to help us solidify this 4, which I'm going to do that. That's going to make a 5-wave move up in blue 3, but again, I'd like to see this guy get a little bit more elevation, and of course, that focus level is going to be the February 2nd high in the SPX. Okay, now, how far can we exceed that through 41.95? Well, again, the 1618 relationship of blue 3 and 1 is going to be 42.99. So let's just step back out to the half-day chart and see what happens to be above us on the way to 41.95, which is going to be the August high. Okay, August of 22, that's going to be 43.21, so a good 22 handles above the 1618 target there. Okay, so we do have some upside targets here, and then let me flip over to the NASDAQ, and again, NASDAQ is going to be your source of a little bit more strength. So let's do, I'll give you the full picture here. Here is, I mean, I'll even go crazy, and this, unfortunately, this charting package only gives me since 2007. I can give you it over to my other data provider. This is the big crash that everyone is telling this is the end of the world on the NASDAQ. So I could be wrong that this is wave 4, but that's the end of the world correction, or crash that everyone's looking at. All right, so that's monthly. Let's get up to the weekly, and and I will flip back and show you my alternatives. I'm laughing, but listen, I get it. I am tracking an alternate count that does show we move lower. Okay, and I'm fully aware that that possibility still exists, though I think the odds favor our red primary count, which is bullish. Okay, so here's the NASDAQ weekly. So I'm looking at, again, a simple 3-wave move. A little bit more elongated, right, in terms of duration and depth, amplitude, I should say, duration and amplitude in A, 3-wave move up in B, and then a little bit more of an abbreviated C-wave move down. And then again, as we go out to this weekly, what do we have here in the NASDAQ that the S&P doesn't? The NASDAQ, one, has a February 2nd break. Okay, so we broke above Groundhog's Day. And that, that really suggests that you have 5 waves off the low. Okay, corrections don't unfold in 5 waves. Corrections unfold in 3 waves. The only way that this is a 5-wave move and it's the end of a correction is if this is some kind of flat. So that would be 3 up in A, some kind of 3 down in B, and then a 5-wave move in C. That would be a corrective flat, which then would allow failure. This is a 3-wave move, but this is not a 3-wave move. This is a 5-wave move. Okay, so you can't go 3, 5, 5. There's no Elliott Wave correction that does that. So, the odds favor that for me when you have 5 down here and it matches up with the S&P, that suggests that you have an ABC completed correction, and then now we have 5 waves off the low, which that then indicates 2 things. One, this is not an X wave, which is a continuing correction that goes lower, number 1, and number 2, the new trend started. the new uptrend started. So that's what I take away there from the NASDAQ. So if we get down to the daily, give you a little bit more detail, and I'll show you a position I have on. I didn't launch my platform. I'm going to hopefully, oh shoot. Okay. Sorry, I was supposed to be giving you a little bit higher time frames there. Sorry about that, guys. Or the bigger picture. This is what I get for trying to do it on my own. So here is that 5-wave move on the NASDAQ daily. And what I do like is we're above that February 2nd high, and we are trying to settle in and then potentially make a new high. Now, the diagonal off the lows here in the NASDAQ is not typical, being that wave 3 was longer than 1. Okay, so here's 100% 3v1. So let's do the same thing. Let's do a 5v3. Choose ratio 618. Okay, so right now, the orange, so this would be the minute 5v3. Okay, we're at a 618 relationship. We bumped up against it. This is the NDX. 13137 was the 618 5v3. So I have the internals of this guy as a 3-wave move. Okay, so it's 3 and 1, down in 2, 3 and 3, down in 4, 3 in 5. Being that wave 3 was longer than 1, okay, wave 3, you know, it's acting like more of a traditional motive wave in that 3 is longer than 1. And you could get 5e3, you could get a move that is wave 5 is the shortest compared to 3 and 1. That's fine. So there's 5e3 and we can do a 5e1. But I think to make it simple, everything is pointing for me up around this zone right here. Okay, so we have the 1618, which is going to be, this 1618 is going to be 3v1. You have the old resistance from August of 2022. Plus, let's do a retracement off of the all-time high in the NASDAQ. You have the 618 retracement off the all-time high in the NASDAQ. This is a huge, huge zone up here. Okay, so where are we here within the smaller degree? I would say if we get down to a 60-minute, okay, I'm thinking we have some kind of wave 2 here. Not sure if this is a B, we have one more push down and then we move up, or if the market wants to get on it, we can secure the wave 2 low and then try to move on up. All right, so that's that. That's that. Let me just check comments, questions. A lot of stuff. Yeah, sorry about that full screen. My bad. I need Terry here to yell at me to do that. Yep. Sorry, guys. So yeah, let's just take a look at the opening here, and then let's see what we have. So NASDAQ up 0.6, small caps up 0.8. Equal weight S&P up 0.5, cap weighted S&P up 0.55, equal weight NAS up 0.76, so a little bit more equal weight bid there. Rates are down. Let's take a look at the 10-year yield. 10-year yield is very interesting, and I think the biggest key that's driving this market here is those longer-term rates. I think we have a little bit more visibility in shorter-term rates, Fed policy, but where longer-term rates are going is really, that's the key that we're looking at in terms of driving rotation and the message that we're getting. What rotation, what sectors, what macro influences would higher longer-term rates have? If we go 3.4, 3.5, 3.6, does that send, what kind of message does that send? Is that inflation is somehow back on the table and that's going to be a problem, the Fed has to be more aggressive? Or if rates are moving up, are people continuing to sell bonds and wanting to go into stocks? or on the other hand, if rates do drop and break through this 3.3 range, what does that mean? People buying bonds, are they comfortable with long-term inflation expectations? The Feds have done the job. Inflation will calm down, and that would be a reason, in my opinion, to buy stocks, and specifically growth stocks. But again, you got to watch the message the market gives you as that 10-year yield if it drops through 3.3. For me, guys, I would be fine. It doesn't, you can do wave counts on yields, which is fine, but they're very manipulated products, right? They're not freely traded like the stock market. The stock market is, Elliott Wave is more applicable to the stock market because you're really following human collective growth, our capacity, our output, our deterioration, our shrinking. I'm trying to come up with a better word than that. Contraction, expansion. That's what you're looking at, is collective output as measured by our stock prices, and that's what Elliott Wave does. FX and yields, they're very manipulated. They're not truly, good animalistic forces driving those markets. So you got to kind of take that with a grain of salt. Okay. So what I'm saying there is, if yields want to just go sideways and stay between 3.5 and 3.8 for the next 6 months, that'd be great. That'd be fine with me, right? But again, you got to watch the message that the market, that any move in yields is sending the market. So let's just keep taking a look at what's going on here. Semis up a touch, 0.3. Semis have been kind of lagging. Sectors on the open. So we have industrials and materials, communications, financials up 0.9, staples down. That's interesting. Real estate 0.6, consumer discretionary. It's kind of a mixed bag here today. XLY, consumer discretionary up 0.7. Let me just sort by percent change. So financials up the most, 0.9. There's real estate and materials, discretion, industrials, communication, tech, energy, utilities, and staples. So it's kind of a mixed bag on the open here. All right, so let's just do that. I'll take a look at a couple of stocks, and I want to show you some rotations that are happening that Terry would normally do. And again, I'm just doing it myself to keep it somewhat simple here today while I'm traveling. Let's take a look at Apple. Come on, baby. There we go. Okay. Apple looking at a pretty decent potential wave 4 support zone here. Nice big old 3-wave move here in Apple. We may have support a touch lower, 59 to 56. You have wave count validation at this old wave 1 high. So anything below that, and this interpretation becomes invalid. So anything below 56.34, I'm going to send this in. And what I do is I'll just make notes on these charts, and then all of our clients who are connected to us on Motive Wave will get these notes on their charts appear in real time. So wave count validation 56.34. I'm sending that up into the cloud, and here's your anticipated support zone in Apple. Show fill. Okay, so that's that. There's Apple. Let's take a look at what else is going on here. Meta has just been a beast. Absolute beast here in Meta. Nice triangle 4 in Meta. Looks like we could have some continuation. I like that triangle right there. That's something we may look to trade here with members. Show channel, okay. And then your typical upside wave 5 projection right into 220, 227. And Meta's looking good. Okay, that's Meta. Tesla is really taking it on the chin here. But has held 786 retracement, so Tesla's still supported, looking good there. Let's see, let's take a look at Microsoft, which has been a beast. Kind of hanging in there, very kind of quiet here since March 31st, but a lot of relative strength there. Google continues to be problematic for me. We're in a position where we need to be in a 3rd wave move, and Google is really struggling. So I am concerned. Okay, I am concerned. Now, that's just a quick look at some big stocks. So let me go back and let me just address the alternate count. Now, I am fully aware that we have a potential corrective move going, and that we may be moving lower. It's not lost on me. I get it. I totally get it. I still believe the odds slightly favor a move up. But if this is the case, here's what we're looking at. It's still a diagonal down to here. And my primary count has the exact same count here, 5 down for diagonal A, up in B, and then my primary account says the correction's over here. This, which would be, green B would be here, green C would be here, and that's it. Alternate count says this is a triangle, okay? And that would be A, B, C, D, E. Now, while we are below 41.95, it's still valid, okay? If you were to break above 41.95, the interpretation that we're in a triangle, that does set up a move towards 3,200, okay? If you break above that, it does a few things, okay? And I'll promise to go back to full screen with the charts. It does a few things. It gives you that 5-wave move off the lows, breaking above the February 2nd high that the NASDAQ has. That will help us confirm that we now have 5 waves off of the October low, this break right here on February 2nd. That is a good thing, right, for bulls. If we can break above the February 2nd high, that tells us we have 5 waves off the low, number one, and number two, this triangle is no longer valid. Okay, so we shall see what happens. We shall see what happens there. Let's take a look at rotation quickly, and then I'm going to bounce off here a little bit. Let's bring up Optuma. Okay, let's do it off of this screen. All right. So let's take a look at, let's do sectors first. Sector RG. Oh, you punk. That's the fun stuff going to a new computer. Let's work this just for a sec. This is something I'm obviously very closely watching, which is going to be the relationship between discretionary and staples, trying to find that balance between growth and growth and value. So this is going to be long-term uptrend of XLY to XLP, consumer discretionary to staples, trying to break above the 2.0 level, but has started to kind of back up here a little bit. So we'd like to see a sustained. Sorry about that, guys. I'd like to see a sustained move above there. Okay. Let's take a look at growth value. And let's do a rotation here. So the first thing I want to do is let's just do growth value. It's very simply not going to break it down any more than that. So let's do growth value and pop it over here. Okay, so this is going to be the weekly, and we're watching the rotation of the iShares IVW compared to this is going to be growth ETF compared to value, IVE. And on the week over week, each segment here, each dot is 1 week in time. And what's happened here on a week over week basis, I mean, we can go back here. Here's the beginning of 23. Okay, and I'm just looking at this date right here. So as you're moving up into the top right, with a heading anywhere from, let's call it, from 90, actually this would be 0 to 90. Anywhere from 0 to 90, that's going to be indicating that this guy is gaining strength against this. And the benchmark, which is benchmarked against your cap-weighted S&P. So in 2023, what have we done? We started out with value very much on the forefront. But then as we moved into the end of January, into February, there's that February 2nd high right here. Remember that February 2nd high, which is so pivotal in this market. What happened? Value is starting to rotate out as growth is starting to rotate in. This is where some of the best outperformance occurs. And this is what relative rotation is really, really good at finding, is to find the sectors, industries, and stocks that will provide outperformance. And what happened here as we go into March, you get the growth moving from lagging into improving, which again, we're gaining strength on the benchmark. And value is falling out. Now, what's interesting is we are right at the point where growth is potentially rotating into the leading as value is rotating out of weakening into the lagging. And I'll give you the cliff notes here, but going back to 2020, if you watch how many times the two shift directions, meaning growth is on one hemisphere, values on the other hemisphere, how many times a year does that happen? It happens once or twice a year from 2020 to this year. So if you count the amount of times they shift, it happens once or twice a year on average. And what that means is if we get that growth rotation in, history would show it should last 3, 6, 9, even 12 months. Okay, so don't take that lightly. And let's add a little bit more detail on that. Let's get down to market capitalizations. So let's go mid-cap value, mid-cap growth. Okay, so let's throw mid-caps on there, leaving your top 500. So what do we have in today's market? We have those top 500 large cap growth trying to get into the leading. We have mid-cap growth already in the leading. Okay, we've had a really good move here in mid-cap growth. This guy, the green, okay, has had a really nice heading up into the leading. We've had a lot of strength in mid-cap growth. Starting to rotate out a touch, okay, because we had a period where large caps are doing extremely well, but the mid-cap growth, small cap growth were coming out, as were all of the value trades as well. Now I'm watching this guy. Is it possible that we hook back up? Again, if we get some clarity on where rates are going and where sector rotation is going to go, do we want to go back to small caps and mid caps, which had a really good run for a period of time? So let me throw in small cap growth as well. So small and mid cap growth. So here is your Russell 2000 growth, here's your mid cap growth, and here's your top 500 growth. So let me just go back and show you. These guys back here in, actually just in February and March, had really good moves. Small cap, mid cap growth. Okay, really good outperformance to the benchmark. They're starting to rotate out a little bit now. But the question is, again, will growth at the large cap level move into leading, and will mid cap and small cap growth kind of make the hook and try to head back in? Or are we going to see, value really rotate in as the market continues to be sort of risk adverse in the fear of coming potential recession and economic slowdown? That's the big question on the table that we're answering, and we're going to look to allocate our capital in the portfolios in line with the sectors, the capitalizations, and the value growth tilt that best reflects the sentiment as to hopefully gain the most kind of alpha or outperformance compared to the benchmark. Okay, so that's on the portfolio side. Let me just check questions. I'll show you the options trade that I have working in the NDX. I don't mind. I trade my live account. You guys know that, and I show it to you. Show you the good, bad, and the ugly. Take a second. If you guys have questions, throw them in here while that's lagging. Okay. So George says, don't forget they changed CPI formula in January to reflect that makes the current CPI numbers fall faster than previous. Okay. Yeah, it's a good question, Ava. I'm not from the States, trying to understand your debt ceiling issues versus the Fed continuing to raise rates. Yeah, it certainly seems like, yeah, I mean, that's been a problem. And there's been issues of potential downgrade as the cost to service our national debt continues to go up. But Fed is really apolitical, and their two primary responsibilities are maximum employment and price stability. They're not so much worried about how the fiscal authorities are monitoring the administration, and the two executive branches are the two government branches are handling their finances. Yeah, Bitcoin looks pretty good as well. I'll take a look at that, Asta. So yeah, Bitcoin's had a pretty good move, and that, again, that's going to be, that's going to be a pretty good lead indication here. So, yeah, I have a call fly on right now, which I told you I'm showing you the good, bad, and the ugly. I have a call fly in the NDX. It's not working very well, and as I said, we're real traders. I show you what works, I show you what doesn't work. A lot of people like just to show you their winning trades and make you feel bad about not always have winning trades, which that is just not a reality of a trader or an investor. I'll tell you exactly the way it is here. So here's what I'm working. I might need to manage this trade if we don't get a response higher in the NASDAQ soon. So I've got a 13.4, 13.7, 14,000 call fly. Okay, and it expires on April 21st. So I've got $3,800 total potential risk, 26,000 max potential profit if we get a pin at 13.7 into April. Okay, so obviously we're well off the mark on this guy, and I'm going to need to manage him soon. So let's go back and take a look at why 13.7 in the NDX and see if there's any possibility. Not a good thing that we're giving up the gains here early. And it looks like we are moving into a potential, getting the C wave moved down. So 13.7 was just trying to get up between the 100% and the 1618 of green 3 right here on the 60-minute NASDAQ, right around 13.7. Wonder if we're going to have a move up, but it looks like it's not actually technically a triangle because E wave made a new high compared to C. So we'll have to rework that one a little bit. I'd have to open this up a touch and rework this wave count with that gap up. A, B, C. Yeah. So looks like we may have a test lower, and I'm going to have to manage that trade and kick that guy out. But support in the NASDAQ should be right down in this zone for wave 2. Okay. Let's take one more look at the sectors. What's responding right now? Financials, industrials, real estate, utility, health, staples, energy. Energy, material staples. So certainly that's going to be your value trade, and that's kind of what I'm talking about. Is we're seeing a rotation into value, and that's something that we as traders and investors need to be very aware of. Okay. All right, guys. Let's see. Any other questions, comments, insults, anything? Throw them over. And I appreciate you guys showing up here. I'm going to head over to the members area. We have a 10 o'clock members webinar at Trading Analysis. Hope you guys are well. Traveling this week. We are in Florida. It's been rainy. It's been windy, except for the first day we got here. So we're doing a lot of indoor things here in Florida, which is fine. Okay. So appreciate it, guys. Have a great one, and we'll see you on our normal setup for the Wednesday.